Um, how much? So first, do you think there is some sort of manipulation going on? Number one. Number two, what would you say is the price of the oil coming out of the Strait of Hormuz? And that links to number three, which is how long before the US, because even low oil prices doesn't mean the US is getting enough oil. The US could still be using its reserves, which are already almost completely depleted. And that means the US would lose significant leverage in any future conflict with Iran. So Iran knows that, and that gives them the upper hand in the negotiations. But I'd love to get your analysis on the price of oil and the current supply glut that everyone's talking about, because the numbers just don't show up. Like in the last 24 hours, there's been 39 ships that went through the Strait of Hormuz in the last 39 hours. So still the same average that's been going on for the last few days, which is, again, half of what the Americans are saying and a third of what it was before the war.
Yeah, let's take the so for in the price of oil, we're really quoting the futures price, which is a paper market, right? And so in the paper market, you and I could open up an account and start trading oil, right? You don't produce any, I'm not consuming any. We have no interest in it. We're just speculators, right? And so right now, the amount of speculating in the oil market is super high, right? So if you consider the signal, producers and consumers coming to a fair market price, that's the signal. The noise is people like you and I just trading who have no interest in either producing or consuming the stuff. And I get there's a point where you say, okay, it's good to have some speculators. They provide additional liquidity. That's good. It's easier to sort of make trades. But right now, the noise to signal ratio is 50-1, right? So for every barrel that's finally produced and consumed, there's about 50 that are traded off. And it's just all this paper going back and forth. Okay, that's part one. Part two is all those managed money people, the money managers, the CTAs, those are the commodity trading advisors. These are the people that are really out there doing all of this crazy paper trading. All right. That's highly subject to being manipulated if you have a big player come in who just starts just selling paper oil. And that'll make the futures price for oil go down. It just will. And there's a normal ratio that they look at, which is, okay, how many of these managed money people are bullish versus how bearish are they? That is, how many long positions have they taken compared to how many short positions are they holding? And then this chart just came out. I'm going to put up here. Just came out a couple days ago from John Kemp. And this is absolutely astonishing what we're looking at here. So what this is this is the ratio of money managers' total long and short position. So it's long divided by short. So if you see here a number like 18, it says they had 18 long positions for every short position. They were heavily long. In March 31st of 2026, they were sitting at about 12. And this is between 2011 and 2026. So this is 15 years of data. So Mario, in 15 years, we've never seen a reading as low as this one we got on June 30th of 2026, where these money managers are as bearish on oil as they have been at any point in time in the past 15 years. Not just a little bit bearish, but the most bearish they've been in 15 years. Now, how do we begin to account for that? Because normally what you're doing in this market is you are saying, well, what are the risks? So we've seen inventories get drawn down. Normally there's a ratio between the inventories and the price. We've set new records for how low the price is given where we are on the inventory curve. New records, right? Like, oh, never been here before. And as well, you and I both know that if you're in this space, these are very smart people. They have to be looking at the tanker traffic. They have to be looking at the verbiage going on back and forth. Those are risks, right? Is the risk of the strait being reclosed zero? No, it's not. It's something higher than that. So just seeing that we have max bearishness in these money managers, there's two explanations. One, they've completely lost the plot line and they've become idiots. Or two, somebody's in there selling a lot, just selling. Somebody's got a sell order in on that. Hey, just sell this. So that's when we say manipulation, to me, that would mean some entity, maybe a government, maybe Japan, maybe ours, maybe both. Somebody with deep pockets has an interest in saying, we need the price to go down. And so we're just going to we have a standing sell order. If any buying comes in, just sell it. That's how you would create that. But that chart I just showed is like, this is max bearishness at a time of literally what is one of the most elevated risk structures that I've ever seen in the oil space is an odd signal. So Let me give you one other possible plausible explanation, though. In truth, there's actually a massive recession that's already been kicked off because of all of the stuff that's already happened. And that's what we're seeing is there is going to be a big dive in demand because something really got injured in the global economy. That's the other way to interpret that at this point in time. But I don't have good data for that in my economic statistics yet.
Yeah, it's not that, and there's not like a massive, at least no. There's the possibility of a big recession, but nothing too significant that would lead to those prices, considering the risks involved. A third explanation that Philip was talking about, what he believes, is that he thinks algorithmic trading is very easy to manipulate. And that's what Trump and the administration are doing. When you feed news to Axios saying a deal's on there's a deal about to happen, there's that many ships being escorted, we control the Strait of Hormuz, we got a great deal with Iran, all these different claims. While we, an analyst that's following this closely would read these statements, we know, he's manipulating the markets, and we start making jokes about it. It's Sunday again, Monday, markets open tomorrow. Trump's going to say something positive, and then he says something positive. But what Philip's argument is that these algorithms are not taking that into consideration, and that manipulation is in information overload for the algorithms that is actually having the effect that's needed on algorithmic trading. So all these different algorithms are selling oil and bearish on oil because of this massive amount of information that talks about a massive glut in oil and a drop in oil prices and the war's over forever and all that, whereas reality is different. So that's what the market manipulation is, a manipulation of the algorithms rather than the people.
Well, that's true. And let me take it a step further, because the vast majority of these algorithms are listen, they're machine algorithms. They have no emotions. They don't really care. The vast majority of them also are not basing their positionings or their trades and all their behaviors on actual fundamentals. Most of them are what are called momentum trades, right? So they're agnostic. If oil's going this way, they go this way. If oil's going that way, they go that way. And these are the machines that are actually co-located on the floor of the trading houses, right? So the Chicago Mercantile Exchange in Aurora, Illinois, there's these firms with these algos, they have machines tucked right on the floor of that, right? Just like they do at the New York Stock Exchange, et cetera. And they have really short fiber optic cables because they need to be a millisecond or a nanosecond faster than the next guy or gal, right? So that's the nature of the beast. So how easy is that to manipulate? Well, one, you do the headlines, but two, if somebody just comes in and gives a little nudge at the right time in coordination with the headline, you get everybody stampeding off in, all the algos start going this way.
What type of nudge? What do you mean by nudge?
Nudge, it's somebody just dumped. So just by way of context.
Okay. Momentum trading, yeah. So exactly. So it's like a big dump along with the news. So you put out a news saying peace deal imminent. Trump says he has a deal with Iran, and then someone gives that nudge by doing a big sell order. No, obviously a few sell orders. The algorithm catches the headline, catches the momentum, it ticks all the boxes, and then the cascade begins.
Exactly. So the way that I detect this is the smallest resolution I have on my trading screen is a 1 minute bar, right? So normally there's a normal amount of volume that happens, a few hundred lots go this way or that way, right? There's normal volume, but then all of a sudden you'll see something right in coordination with those headlines, 2, 3, 4,000 lots just come piling in, right? Which is 2, 3, 4 million barrels of oil suddenly all being sold in that one little chunk of time. Well, that's that little chunk of time. All these other algos are looking at that going, I better be on the right side of that trade. Let me get out of my longs. Let me go short too, right? And so, yeah, that's the nudge that happens.
Yeah. Interesting. I never thought of that momentum aspect of it. And then there's China as well. I
don't know what China's up to. Do you?
Exactly. I swear, it is just insane. They're just so quiet in the background. I feel like they're like steps ahead of all of us. Or maybe they're behind us. We're giving them too much credit. I don't know. I don't know what the hell's happening there. Their economy's an enigma. There's all these different cracks that people tell me about, but somehow they keep humming along.
Well, it's astonishing. So China's housing market went from super bubble territory into deep correction. And everybody said, well, that's it. Because that was 30% of their GDP was just building apartments, So that should have just that should have just absolutely cratered their economy. And I don't think it did anything. And I don't understand that. It's a very weird thing. So they have a command and control economy. I think they're able to move pieces around in ways that other nations can't, because otherwise that should have really cut two at least two legs off of their stool, and nothing.
Yeah. And Jeffrey Curry, he a couple of weeks ago, we were talking about the price of oil and trying to figure it out, because obviously he's been extremely long oil, and he's just surprised by how far it's dropped and how quickly it dropped. And he's telling me how, Mari, that something happened in that Trump-Xi meeting, because since then, that was the peak, around that period, a few days plus or minus. And something happened in that meeting to not only bring down, because it already started going down, the Chinese demand for oil, but keep it down despite the low oil price. He doesn't know what it is. Doesn't know whether next month we'll have Taiwan as part of China or something completely different. But a discussion was had at that time between Trump and Xi. We just don't know what it is. Yeah.
Well, the quid was China stopping importing oil like pretty dramatically. What's the quo pro? Don't know. But I guaranteed China got something out of that. That was max leverage. So we'll see what it is.
Have you been looking at the numbers coming out of the Trump's wealth, how much money he's making from all the stock trades and stuff? Yeah, you have. Yeah,
yeah,
crazy.
When I talk about the moral nihilism, it's just insane to me that a president not only can trade stocks and then make deals, with that being not somehow completely illegal, but the volume of his trading, it's like a full-time sport. Like, you would have a hard time trading that many shares if that was your full-time job, right? So he must have somebody doing it for him, I guess. But at any rate, it's just as unseemly as it looks. And then, there's all kinds of stuff that happened with obviously the meme coins, and then this crazy thing that happened where, and this is the one that still, I don't know how to interpret this one, bothers me a lot. So there was this shooting at Brown University. And then a couple of days later, there was this professor, an MIT professor, gets gunned down at the door of his home. Oh, these two people must have known each other way back when they were both college students. That guy was the head of a fusion company. It was one of his jobs. And the competitor to that fusion company, just days later, got a $9 billion funding commitment from Truth Social, which is Trump's it's not an energy company. It's just very weird. And I will not be surprised to find out that company, TAE Systems, ends up with a big contract at some point. I mean, we've seen enough examples of this. Like, this is now a thing.
Look, I've said this, I say this a lot. The more I do, obviously, what I'm doing and talk to the people that I talk to, and especially when I have these private conversations, the more I realize how much is happening behind the scenes. It is wild. It's not, I'm not in the belief that there's a few people pulling the strings. It's that easy. They meet in one room and make decisions. But I definitely don't believe that the system is perfect and decentralized and fair as I used to believe 20 years ago, 15 years ago. Yeah. The reality of it, there's a lot there when you understand things like how much influence certain people have, how easily they can be impacted. Let's just give you a silly example. That was a video